Let's get to Philip Palumbo, founder, CEO, Chief Investment Officer at Palumbo Wealth Management. Look at what's going on here. Nasdaq's up 10.5%. The Dow is up 2,600 points. Some of your thoughts on the moves we're seeing today?
Today created a little bit more certainty for all of us as investors, finally, around the latest 90-day extension for tariff negotiation, and really seems like the focus is on China. Everything that's gone on with the past couple of weeks with Trump with these negotiations, I mean, Trump is all about making big bets. And this was some big bet in terms of the trillions of dollars that was lost in the stock market. Obviously, today it's great to see an up move, but as we know, when it comes to the stock market, you have some big moves on the downside. You get big rallies like we're seeing now. Oftentimes, you do get a retest, and we'll see if it holds. A lot of that is dependent on what's going on. But it's nice to see a little bit of certainty come into the market, and that's why we're seeing this rally.
People were worried not only about the equity market, but about the bond market, about the U.S. dollar, right?
Yeah, the bond market is my biggest concern right now. Seeing the bond market move, yields move to the upside here was something that we were not expecting. The whole move down here is on a growth scare, based on consumer confidence declining, business declining, and obviously with the tariffs, adding that to the equation, the odds of recession increases. And with that, normally yields go down, bond prices go up, which that is what happened in the beginning. And then all of a sudden, the past couple of days, we saw yields go up. So that really concerned me. So the question is who's selling our bonds? And that's the big question. Is there a big unwinding trade on some hedge fund that's leveraged up 10, 20 times that's creating that? That's the big unknown right now, and that's something really to watch closely.
The majority of the bonds are still held here at home. It's still domestic for the largest bondholders. Then you have abroad, you have Japan, you have China. And to your point, people were in fact selling bonds. There were reports here of some of the traders telling me they're selling bonds and they're covering margin calls. They're buying equities so they can get some liquidity. So I think there was a lot happening all at the same time.
Yeah, the good news is that we did have a very successful auction today. So that is really good news, and everybody was watching that. Besson talked about that today, with his when he announced the tariff situation and the 90-day push off. But yeah, the auction was successful today, so that was a good thing.
Yeah. So what are you doing now? I mean, what's the investment advice?
So the investment advice, and the way I always look at it is, we have to look at the stock market as we call Mr. Market. And that was introduced to Warren Buffett by Benjamin Graham. And Mr. Market can be a manic depressive. There are times when the market is manic, like we were prior to all this, where we had all-time highs. We had multiples trading at all-time highs. We had overvalued markets based on the hype of AI. And that was the manic market. And then we went into a depressant market because of the tariffs. And when you go to a situation where the market is depressed, that's where opportunities arise. So with volatility, there's opportunity. So as investors, we have to take advantage of that. We can't, we know what the known was. It was Trump making a big bet. We didn't know how it was going to play out. So that's completely out of our control. What's not out of our control is taking advantage of volatility to buy into some great names that perhaps you already own or you're looking to add to.
What's interesting here is, I'll give you sort of some color here. Porsche comes out and says they saw sales up 40% from the first quarter of 2024. They killed it. U.S. retail sales in the first quarter was a record. So folks, somehow we're still, at least some folks, were still spending and still confident. And part of the story here was soft data versus hard data, and a lot of folks jumped on the recession bandwagon. We have not yet seen recessionary hard data.
Yeah, so I just got off the phone with a great economist at NDR Research, and we had a whole conversation around this. So the soft data is telling us a story that the potential for recession increases. You never really want to say for sure you're guaranteeing a recession to happen for any economist or any investor. All you could do is say, what's the chances of an increased probability of recession and vice versa. So based on the soft data, it does point to an increased probability of a recession and the uncertainty around the tariffs. Now, again, there's some certainty that's been now that's in the picture, which is a positive thing. But the question now is the soft data going to lead to the hard data? We don't know the answer to that. As of today specifically, and as I was having a conversation with economists, the data is pointed to no recession today specifically. That may change as we look at the data going forward. So, I mean, like always, really, I mean, we're going to continue to be data driven to see if the hard data points to a potential recession.
And when you look at the different types of, you know, I see that you have the different scenarios, and you did look at the potential upside scenarios. Are there certain sectors that you would recommend? I know you probably can't recommend specific stocks, but if someone wanted some actionable advice right here, right now, what would you say?
Yeah, I would, on the stock front is where I normally look to invest for clients. It's not normally sector focused. So, you know, we have a core stocks of about 20, 25 businesses that really share three common traits. One is earning stability, two is a 70% conversion of free cash flow, and three is a high return on invested capital north of 8%. So with this volatility, two businesses that we really do like a lot is Berkshire Hathaway and United Healthcare. So Berkshire Hathaway, you know, for me, it's all about the founder and the money manager of allocation of capital, and Warren Buffett fits that bill absolutely perfectly. Even with the succession plan with Greg Abel, I'm very confident that, you know, that's going to work well going forward. He's flushed with cash. We've all been talking about it, over $300 billion of cash. With this volatility, I'm sure opportunities are going to arise to allocate that capital. There's the growth expectations over the next 3 years is between 4 and 6%. And the businesses that are owned privately are great quality businesses. And even on the public side, as we all know what they are, you know, he owns great quality businesses that produce lots of free cash flow. Many of them on the private side are tariff proof. So we love Berkshire Hathaway at any type of weakness that we're seeing right now.
And we're also getting breaking news, Philip, and I want to get your reaction to this. Goldman Sachs is now rescinding its recession call. Yesterday, we also were hearing from JP Morgan. They put the likelihood of a recession up to 60%. Goldman Sachs last week had raised their recession likelihood. Now they are rescinding that recession call after the Trump tariff pause. Your thoughts on that?
Nicole, many of these Wall Street analysts and forecasts that they make, we all know it's a big waste of time. And to make those forecasts, I don't see the value in that. I see the value in looking at volatility and taking advantage of that and investing in your disciplined process that an investor has, and whatever that may be for everyone. Everybody's different. So that, to me, that's more value to look at something like a Berkshire Hathaway, United Healthcare, especially United Healthcare after the government approved a 5% increase in pricing on a Medicaid Advantage plan, like things like that. For me, over the next 3 to 5 years, I'm going to make a lot of money in those investments. So for me, that's value add. To try to forecast a recession, to try to forecast certain situations like that on the macro front is very, very difficult to do. And the most successful investors in the world just don't do that.
Understood. They did, just so folks have a sense of it. I mean, Goldman Sachs did have its second hike in a week of the odds of a U.S. recession and had gotten up to 45% likelihood from 35% likelihood of a recession, but now have rescinded that call altogether. Yeah. And this morning you heard from President Trump on Truth Social saying, great time to buy. Everything is going to work out. Be cool. The USA will be bigger and better than ever before. This is what some of the headlines have been. Philip Palumbo, thank you for combing through them with us. Really appreciate it. Founder, CEO, Chief Investment Officer, Palumbo Wealth Management.